All right, guys, welcome back to case studies number 2. I know that there was a huge gap in between these, and it is going to be my next goal to be putting them out more consistently and, really delivering more case studies on companies that I've been screening for to put into the Discord. So that's my apologies. But nonetheless, we're going to be going over a stock that I have actually entered into previously based off of the screener. So first of all, yes, you have already seen this, guys. We know the steps of screening and executing, so I will be walking through these now. Jumping onto Finviz, funny enough, I did use my typical screener, right? So that's large cap stocks, analyst recommendation, below 20%, the 52-week high, optionable, not overbought, positive growth, right? So the stock that I came across originally was actually PayPal. And what's funny enough is that PayPal is actually not showing up on this stock anymore, or stock screener anymore, because it's actually pushed to the upside that it is no longer, if we go candle close here, it is no longer 20% below. It's actually just pushed out of that. So that's the only thing that is not having it come up on the screener. But nonetheless, that shows you I want to be buying value opportunities. And I can assure you when I bought down here, it was coming up on that screener. So as you can see, going into PayPal after finding it on that screener, we know that EPS is going to be positive. We can, look onto here and see the statements. Okay, EPS positive, revenue positive. And what I kind of liked when I did a further dive into PayPal is that they're really on the back end of payment processing and overall transactions, right? So they're not really the company that they used to be, kind of in that tech, hype kind of space in 2021, very, very early 2022. They've kind of really changed their business model out, and they're getting a lot of nice revenue and earnings from their new model of just being on the back end of connecting payments. You could see that based on PE, it's actually trading at the lowest level it ever has. Right? So investors are really not paying much for these earnings. However, if there is a little bit of a narrative, we can definitely see PayPal going to get some traction, especially with maybe their earnings event coming up as well. That might be another event worth looking out for. But nonetheless, okay, we have revenue and earnings checked. We can also kind of look into maybe Yahoo Finance, I would say, is going to have a nice lot of news events for PayPal. Yahoo Finance is always a solid place to find news and that stuff. I mean, Seeking Alpha will also do the justice, but I think that PayPal or Yahoo Finance is good for me looking into PayPal. So if we boot this up, again, just showing you like raw, like what I look for. We could go into news of PayPal, which is going to be more into here. And it's like, okay, what are we seeing? Like, okay, great. Like PayPal stock is up. Like, what do we need to know? Ads managers for small businesses, right? So they're really on the back end of these transactions now. It's really a different business model, right? You could kind of go through here, but to summarize it, I really like all the things that are coming to play for them, and I'm totally fine with saying, okay, it looks like they have a nice little edge in the market. Their EPS is going to be positive going forward. I like it. Getting into the technicals of it, now that we've kind of valued the fundamentals correctly. And on top of it, I also want to point out that, if we go to PayPal on here, you will see that it's a large enough company to get a Morningstar brief. Yeah, so perfect. We can see that $94 fair value is solid upside from here. So like about like 20%. Like I think that's great. But and you can see the history of what I put on. But I think that it's definitely solid if Morningstar is voting it as a buy. Hedge funds and insiders, definitely a lot of insiders have bought. But you can also see a bunch of news here as well. But yeah, definitely just like ad platform stuff like that. That's great. In terms of why I decided to execute now, I looked at things to consider like Bollinger Bands, RSI, MACD, accumulation distribution, right? So unfortunately, there wasn't much of a divergence here besides, okay, this is the same high as here. Didn't really show me that much. Add on the MACD. I really like a MACD that's positive in the daily, but I more so like one on the weekly, and it looks like it was about to flip, which it's about to right now. So that was also another reason. And then finally, RSI is great for any divergences. I forget if I found any here, but essentially all the divergence is saying is it's like, okay, we're making lower lows. Like here, you can see there's a divergence to the downside. So you can see how higher high, higher high, higher high, higher high, but we're making lower high, lower high, lower high on the RSI, which led us to, really a downturn of like 15%. So I really liked kind of the fact that, okay, some of these indicators are feeding me reasons to buy here, but also we're in an uptrend, at least based off these 2 points. And if you take a Fibonacci extension here, we already took out the 78.6, and now we're at the 61.8 and 50. So that's why I decided to buy there. And most importantly, what strategy did I choose? So we determined the bias. We determined, okay, it's a solid time to execute. What strike did I choose and what strategy, if any, right? So I was buying right around here, okay? And you can see that on my history. Keep the receipts. So the 23rd of September is when I entered, which was here. And I was selling the $66 put, which was essentially a strike and a half away. Like I can't remember if I was getting in when it was $68 a share or 67 and a half, right? But I sold the $66 put because it was right below these lows. So if these were to get swept, I would be perfectly fine buying there. And I was receiving a solid premium. I was receiving $134 for a contract that expires, in a couple weeks' time, right? So obviously the stock has ran. That's fine. The position is in profit, right? So it's worth noting that yes, like we collected premium. That's great. There's obviously inherent opportunity cost with the fact that I could have bought shares instead and reaped, a 10% return versus just getting the premium. But I would honestly look to do this, and I'll do this on the call right now or on, the video. I'd like to roll this probably. So we can see, okay, $73 a share. Okay. We've obviously done very, very well. I understand that earnings are coming up. I would rather be selling options during earnings than or selling puts during earnings than selling calls, just because if the stock blows to the upside, like my calls, like they're in the money. But for here, I'm totally fine with selling some puts and getting more premium, especially if it goes down, like I got the premium, that's fine. If it goes up, whatever. I would probably be looking on the option chain 45 days out and probably around a 30 delta. So I would say, honestly, this is solid, or I can always do the 14th and go 70 or 69. Actually, I like that a lot more. I'd probably do something like this. So let's head into here. And again, just to make it clear, the reason I bought into PayPal was because I screened for it with the screener settings. Solid revenue, solid reason for the revenue increasing, a solid moat and thesis behind it. And then I validated it on the charts. Why is it good right here? The Fibonacci, the RSI divergence, the MACD flipping, and overall just want to get into stock. I sold puts, right? And now we're going to roll. So I hop into here, and I'm only rolling because the delta on this is literally like 10. Like, that's all right. I rather collect a little bit more premium. I could let it go for a while, but it's totally fine with me. Look at the 14th. That's still solid time on the contract. And I will go 69. I get a credit for that. Nice fat credit. That's also because there is going to be some implied volatility with the earnings event. So if I wanted, I could always go to like $68, but honestly, like, it doesn't really matter to me. I was already willing to buy at $66, so 69 right here. Like, Again, not to get too technical off of an earnings event, but like, you know, it's a nice little pocket here that I'm fine with buying. That's not going to hold up, I can guarantee it, but it's a nice little pullback if it were to happen. I'm fine with buying this. You could also do this and receive solid premium, but I'm going to go with this. 30 delta, rolling one, and I think that we could probably get 205 for this, maybe even 206. Yeah, we'll go for 206. Review order. Collateral, I believe I have. Yes. Yes. Beautiful. All right. So we just got that. And you can see in here. Yes, it's a little bit of a down day, but we're still doing super well. Month, year to date. As you can see, though, that has cleared my pending transactions, and it is now here for the 14th of November. Hopefully that was super helpful. I tried to break that down the best I could. Obviously, I'm going to have more videos come out soon and more consistently on why I'm picking those stocks. But yeah, hopefully you saw why I was entering into PayPal at that time. Feel free to, again, not advice, but you can, you know, essentially copy my position if you'd like in PayPal. I do think that there is some risk of assignment if they decide not to hit earnings for whatever reason. You could see that there was a downturn of 8% the last earnings call. So if we were to go, you know, 8% here, we'd be at about $67. I think it's totally fine. I think I'm compensated for the risk. And if it goes up, we're still doing very well. So I will see you in the next video. Peace.